Welcome back to the show, everybody. Check out the headlines as Silicon Valley Bank is going down. The bank runs continue. Will they be bailed out? That is the question. And Caitlin Long talks about a faction of the government wanting to create a new government bank similar to postal banking. Did you know that Ripple is prepared to handle postal banking? We're going to show you the evidence. And Elon Musk said he might buy SVB. We got that and exactly what happened. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on TikTok, YouTube, and Twitter for exclusive content. Right now, $978 billion market cap for cryptocurrency. It's up by 1.8% in the last 24 hours. Right now, Bitcoin, 20,400 plus. Ethereum, 1465 and change. Tether, market cap is 72.1 billion plus. XRP is 35 cents. It's off by 0.8% in a 24-hour and 4.2 in a 7-day. Ladies and gentlemen, this is fine a time as any to tell you about Glint. Yes, they're a sponsor. I was a customer first. You know, they're getting ready to do a webinar 3 days from now on the new features in the new app of Glint. Look, it's your way to get gold and to be able to buy, sell, save, spend in your app, and it's physically allocated gold. It's not paper gold. It's your gold. Glint can't touch your gold. Only you can touch your gold. It is an amazing, amazing products and service. Make sure you check out the link underneath the video because I tell you, as Tony Edwards here from Thinking Crypto says, shout out to him, gold demand surged to an 11-year high in 2022 on colossal central banks and businesses. I'll tell you something. This is what I know right here. I'm stacking my pennies next to their dollars. That's what I'm doing. It's not financial advice. I'm just sharing my digital perspectives. They seem to never lose, so I'm trying to do in some small scale what they're doing. Now, SVB, Silicon Valley Bank, and the bank run that we're experiencing here going into this weekend, what will happen, we don't yet know, but some Wells Fargo customers now posted online that their direct deposits and scheduled paychecks were missing from their online banking accounts. How about that one? We hope that it doesn't become systemic, but there is the question. Now, this is what was going on inside the FDIC meeting in November of last year, just a handful of months ago. Listen to Gary Cohn here.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. If they just assume they're going to pay my claim, right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
Well, you know, and here we are now in the general public with everything that we're understanding about Silicon Valley Bank still unfolding. Here's how one gentleman says exactly how it happened. Take a listen to this.
Fast forward to last week, and this is when it gets really crazy. Moody has a phone call with the senior executives at SVB. Over the last year, everything has collapsed, as many people know in the tech industry. Valuations have collapsed, deposits went down, and interest rates went up so fast that 1.56% yield was a lot lower than what you could get from bonds in the market. Bonds in the market, and so therefore the value of the mortgage-backed securities plummeted, right? Why would you hold a security that could lose money when there's a risk-free interest rate you can get from bonds? That's what Grant and others were saying. And so ultimately, when Moody sat down with them, they said, we're going to give you a major downgrade because everything is looking like shit. So because SVB at that time was burning through cash, the stock price was tumbling, and they had to find a way to meet their losses. So By the way, along the way, on February 27th, the CEO and the CFO of Silicon Valley Bank sold a large proportion of their shares. In the middle of last week, though, forwarding back to recent, Moody's, when they told them that they were going to downgrade their credit, SVB started scrambling. They began consultation with Goldman Sachs. The CEO, Greg Becker, actually flew out to New York, met with Moody's to discuss the situation, try to calm the whole situation down. They then, in a scramble, had to sell 20 billion worth of the MBS, which they sold at a giant loss, leading to a $2.25 billion deficit, which they now had to cover. So they went and they got, and this is where it gets crazy, they actually found an investor to at least cover 500 million of this, General Atlantic. But they were the other investors were they had other investors, but the timeline was so short. But when they went to General Atlantic to get this money, they were going to have the deal done by the morning before everything opened. But the disclosures were not complete. The information comes out, the downgrade comes out, the information comes out about the loss, a bank, and then Founders Fund somehow, I'm not going to say how, but Founders Fund, YC, Techstars reach out to all of their founders, and they say, hey, get your money out. When they say get your money out, there's a bank run. The bank run leads to collapse. The collapse leads to ripples throughout the entire ecosystem. That's what happened.
That's what happened. And you know what? We've been reeling from it ever since. And here from DAI again says, if you see Berkshire Hathaway show up to save the day, you should know who the top shareholder of Moody is. And it's Berkshire Hathaway. Did we just watch the shareholders of Moody collapse Silicon Valley Bank, knowing what the downgrade would do to them? More questions than answers, ladies and gentlemen. And how did Peter Thiel of the PayPal Mafia get his money out and know to take it out before all of this happened? And tell everybody else that he knew to do it too. How come we don't get to know those things? Approximately 125 VCs and investors signed a statement supporting Silicon Valley Bank as a way to limit the fallout of the bank's collapse and subsequent extinction of tech companies. Now, you think about the incredible amount of tech companies alone that are tied in to Silicon Valley Bank. It is enormous. Billionaire Bill Ackman has urged the United States government to guarantee all deposits held by Silicon Valley Bank within the next 48 hours or risk the destruction of many financial institutions, and I would add tech companies and tech giants to that. Meanwhile, this guy, Elon Musk, said he's open to the idea of buying Silicon Valley Bank as he lays Twitter payments groundwork. Things that make you go, John Deaton says here in response to Jesse Powell, who says the whole premise of fractional reserve banking is flawed, and I agree completely. It's a confidence game and rumors spread fast these days. Ordinary people should not have to constantly DD their banks. Fortunately, there's a type of bank that just vaults cash. Unfortunately, the feds are blocking it. He's referring to Caitlin Long's Custodia Bank. And I tell you, he makes a great argument here. Then there's this. Listen to this clip here from Carol Roth and Glenn Beck talk about what could be coming because of this collapse.
What does this mean for the average person?
So I think a couple things. One is for the average person, again, you need to go check your accounts and check that FDIC insurance, or if you're with a credit union, they have a similar entity that does credit for credit unions, and make sure that you have that insurance. And you and I have talked about this before, Glenn. This is not a commercial, but hedge your portfolio. Make sure you've got 5 or 10% of your portfolio in alternative hard assets like gold, like precious metals, things that you can control, because what the Fed has done with policy, and we've been talking about this for a while, is creating a serious issue. And the thing that I'm most concerned about long term is that they're going to use this as a cover story for a central bank digital currency. You knew exactly where I was going with this, because they're saying,
I agree with you.
And you have to wonder if that does lead to that. The clip goes on. But look at what Caitlin Long says here about the Silicon Valley bank run. There was an article that came out by Bloomberg that says the U.S. discusses a fund, which would be a new special purpose kind of vehicle to backstop deposits if more banks fail from this. And they are certain to do so, according to everyone here who knows and has information on the matter. She says, watch this because there's a U.S. bank regulatory faction, she says, that wants to create a government bank, like postal banking in some countries. They want commercial banks gone. I don't know, but this could be the first step towards constructing such a thing. Wouldn't surprise me. Now, all I know is that when she said postal banking in some countries, this reminded me of a few years ago here. We covered this. This originally came from Kelly, Costa Rica. Shout out to her. I want you to listen to this clip here about 2016 report that came out about blockchain technology, the possibilities for the U.S. Postal Service and banking using blockchain technology. Take a listen.
Okay, so thank you for that. And what I wanted to touch on here is in that bill, there was a discussion about, let's see here, the United States Postal Service, because there was a discussion about how they were going to get that bill to everyone. So, or get that money and funds of stimulus, to everyone. And they referenced ATM machines. If you don't have an ability to have a cell phone, to have the app to get the money, you could do ATM machines, or you could go to your United States Postal Service. Well, this is a throwback because Costa Rica Kelly sent this to us, and it's May 23rd, 2016. However, I want to take you to the blockchain technology possibilities for the United States Postal Service.
Let's take a look at this now right here, because you're going to like it a lot. Yeah, I know you're sitting there thinking, Brad, what's this all about? Well, this is what it's all about.
In a consortium, a private blockchain, the right to alter the ledger by participating in a consensus mechanism is restricted to pre-selected individuals or institutions. Transactions may either be publicly available or restricted to a select number of participants. Ripple is a prominent example.
I don't know where this goes. I don't say this to be an alarmist. Will this become a stage-setting moment to introduce a U.S. central bank digital currency to track these deposits and the leveraging that's taking place through fractional reserve lending? I don't know. Will there be a play by a banking regulatory faction to move towards a new U.S. government bank that works more like postal banking, as Caitlin Long suggests? I don't know. But what I do know is that RippleNet and on-demand liquidity could be a lifesaver right now for so many banks facing a bank run. Imagine what releasing dormant capital could do to save banks and businesses and customers at a time like this. But it may just take deeming something systemically important like RippleNet or on-demand liquidity. Where are we at right now with XRP? We don't know. Right now we know that Eggrag Crypto tells us XRP on the 3D TF still ranging as presented below the chart here. 30 moving average is acting as resistance, but it's squeezing down to the 36-cent mark. It says which will make a move soon. If we close above, it goes 62 cents, super bullish. We close below, we go 28 cents, super bearish. In between is just ranging, ladies and gentlemen, and that's where we have that today. I appreciate him and all of you on this Sunday. I tell you, I just say this, very real people are having their lives crushed right now. I'm not cheering for anything other than a solution. I don't want anybody to be harmed in this, but something needs to happen. This is an obvious moment that the banking system as it is completely broken. What will come of it? I don't know, but I do believe that a company like Ripple has been working to build the kind of market infrastructure to offer some kind of a solution. Not financial advice from me or anyone else. It's just my digital perspectives. I'll catch all of you on the next one.